Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Thursday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and we continue to grind higher. There's really no other way to describe it. It's been a sloppy grind, and we've been in excess of 70 handles above the 45-day pivot now for going on 4 to 5 sessions. Peak price this morning went over 80 handles, which our little moniker for that is bet the house. But, you know, I've got to say, this is a little different this time in that those areas were created as inflection points. And I was saying to my subscribers last night, typically we would be in crazy town for 20 minutes, 30 minutes, and then, come on back. With basically creating a base there in the last 3 or 4 days, you really have to be careful in making any, huge bets in either direction. We're now in an incredibly dangerous place to trade. The bears haven't been able to break it. The bulls are completely overextended. I mean, completely overextended. And we are overextended in a sustained fashion, which in my work explains how really sloppy the last few days have been. They've been extremely sloppy because we're in an area where nobody can trust the market. The bears can't get the break that they want. The bulls know they're overextended, and they feel like every minute up here is a minute that they've basically stolen that they didn't think they were going to get. And so everybody's getting spooked out in both directions, at least in the regular session. Last night in the Globex, we pushed lower. Tonight we're pushing higher. We'll have to see what the effect of that is once we get into the regular session. So the only thing I would offer is, caution, serious caution, whether you're long or short. If you are long, you need to take profits. You can have a runner and you can roll it up. And if you're a really long-term trader and you're looking for somewhere to roll it up to, you roll it up under that 20 to 21 floor that we've talked about, because that floor is established and we've now done, 23 handles off of it. If you're short, you have to be small, very small, and you have to take the opportunities to trade around it when you get them. We had a couple of decent moves down yesterday, but they're not lasting. Typically, the way something like this will break is that we will have a big red day, and then we'll go right back to green. There's pressure here that needs to be relieved, but the dip buyers are going to come right in and grab it again. So, and when does that red day start? It's going to come out of nowhere, and it'll be, it'll be fast and furious, but it'll be over before it starts. So I'm not expecting multi-day down move here. I would be surprised if we got a multi-day down move. I think we will get some part of a red day to get some of this pressure off, to get us out of the plus 80 area, to get us out of the plus 70 area, and get us back into more of just an overbought situation. We would have to come down from here. We would have to come down essentially to 2013 to 2010 to get back to neutral. And a move like that, or a move to the middle band at this point, is probably too much to ask on a single move down. So you're seeing the middle band start to reach up to meet price. It will continue to reach up as it sheds all these old prices. So ultimately, maybe after a couple of starts, we'll go down and we'll test that middle band. But I would expect that middle band test to come with a 2 handle on it over the 2000 area. And I know it's only 1985-ish right now, but that area is going to it's going to accelerate to the upside rapidly, just like the market has accelerated to the upside rapidly. So, and when we get to the middle band, of course, that'll be a big test. But based upon the price action now, absent some news that's come around the corner that we don't know about yet, I would fully expect any middle band test to be a buy. So that's the landscape of the market. The bottom line is You have to be small. You have to watch your risk in both directions. It's not a time to be loading up short because the market's not cooperating with you. It's not a time to get greedy on the long side because we're extremely overextended. So this is the time where everybody gets frustrated and the market keeps us hanging up here for 3 or 4 days, and it'll reveal what it wants to do. We've had a lot of tight range days. We're due for a big range day. Um, Whether that's up or down remains to be seen. But whatever it is, control your size and control your risk. Okay, everybody have a good one. Follow us on Twitter at Princeton Trader. Check out the website. Check out the chat room. I'm doing a webinar this afternoon, 4:30, with Bob Lang of explosiveoptions.net. Check out the Twitter stream for the sign-up link. I'm going to put one in this post. We're going to talk markets for about an hour. Should be really good. Bob's a great guy, and he's always got some really great stuff to say, and I hope everybody gets a lot out of it. So hopefully I'll see you this afternoon at 4:30. If not, I'll catch you tomorrow morning with another webcast. Trade them well.